Welcome to Winning Wall Street's Money. Help support my channel. We need to get to 1,000 subscribers pretty much as soon as possible. So then I go live streaming because YouTube policy, they won't let me go live until I have 1,000 subscribers. Thank you to all the folks out there that have subscribed to my YouTube channel. If you have not yet, please take this moment now with helping me. Click subscribe. Next, click the bell. And next, click all. This helps you receive a notification when I post my next videos. Plus, click the thumbs up button and every time you watch my videos. If you got value from this video, if this was helpful, then please consider sharing a small monetary donation to my channel by going below and clicking on either my Patreon or PayPal links. If you join my Patreon page, then you'll get early access to these videos 24 hours before they're posted on the YouTube and lots more. If you prefer just leaving a small tip, click on PayPal. Either way, then you get that warm sense of satisfaction years down the line knowing that you helped me become a successful YouTuber. Monday, June 20th, 4:26 p.m. New York time. This is a broad market review of many industries, the equity indexes, the fixed income, the currencies, the metals, the energy. We're going to be looking at the time frames using 4-hour candles. These are candlesticks, and each bar is 4 hours. And this trading platform I'm using is the Thinkorswim, offered from TD Ameritrade. So the US futures will be opening 6 p.m. New York time. That's soon. That is soon. And then we'll start the first day tomorrow for the US stock market open this week because today was a holiday. So looking here, over a 10-day period, 4-hour candles is a picture. Friday, we had massive consolidation. And overnight last night and now, we have a small trading range. Makes sense. It was a US holiday. Still, we're also inside the range from Friday. That's key. That means undecided. Yeah, even though it's a lighter trading period today, be advised, undecided what the market wants to do. So key levels above and below, look for potential retests as well as reversals and breakthroughs for trade signals on the faster time frame. What is a faster time frame? Well, faster time frame is below the one I'm showing here, which is 4-hour. Look here, the several days, you notice we were down here below 134, below 132, consolidation. We had impulse move up, consolidation. So staircase pattern, higher high. If you've been following my videos, you often hear me say that, consolidations and staircase pattern, higher high. That's what's happening here. It's a retest. The bigger picture is still bearish, but it's doing a retest without a lot of volatility right now. Look at the US dollar. Last week, from close of Monday to Thursday overnight, there was a key consolidation. Then you have this huge red candle, huge impulse move down, retest with a bearish pin bar. That's a trigger. And then you have impulse move down, a light retracement into Friday. Look at those last 3 candles up there, massive consolidation. Overnight, we broke down, and today, light trading range, but still we're inside that range of Friday. The bigger picture is consolidation down here, impulse move up, retracements. I want to show you something. Looking here at higher time frames. Let's take this to a daily. There we go, looking at a daily. Yeah, last week we had a sell-off, a retracement, and then we have inside candles, these 2 periods. This is a wedge, and that wedge is building a coil. This, folks, is a cup and a handle. If you know how that pattern works, you know that's bullish bias, and you know where the trigger is. So the handle's in a phase, And when it breaks the top of the handle, let's consider a bunch of new buyers coming in. But a lot of people are saying this is bearish going lower because they don't look at higher time frames. Take this to a weekly, each candle's a week. Yeah. The bigger picture is look for the forest for the trees. Clear singles, what's going on there? Let's look at equity indexes. Even though the stock market was closed today, the futures market was still open half a day. We're looking here at the S&P 500 futures, symbol ES. Here's Friday's range from here to here. A lot of whipsaw in the middle. We already took out the high today, the high of Friday, bullish bias, the S&P 500. And notice when we had here, that was a key supply zone up here. Broke above force, indecision, broke above force. As well, we had lower highs. Yep, so when it sold off there, it became a demand. And when it sold off there were enough buyers stepping early instead of running it down there. Bullish bias. Load up my drawings. Look at what we see here. Supply zone of sellers. We rejected it so far in this 4-hour candle. We tested it, but we didn't close in it. Big, huge candle. Midpoint labeled. Potential retest areas. Yep. These are levels I'm looking at for prices tests. We have the downside label, the upside. If I take this to the faster time frame, below the 4-hour to the 1-hour, as well. Actually, let's go back to the 4-hour. I want to show you what's currently happening with the Elliott wave. 1, 2. We're only in 2, and that's still down. So I'm looking for another 2 to 3 more for potential reversal. So even though we're retracing here, if we don't break this swing high, yep, that's telling me. And if we do 3 to 5 of these to the downside, I'll still be looking for a reversal. NASDAQ 100. Yep, it's a slow crawl. It's working its way. But notice, I'll get there in a minute, that the S&P 500 was more bullish. The Dow Jones, yep, it broke high already. So the Dow's even more bullish than the NASDAQ. And the Russell 2000, more bullish. So let's zoom in here. Let's take this off. These are all the equity indexes again. So we know the past few days, the NASDAQ was the big hard sell-off. Yeah, look at here. The S&P 500 already broke above. I mentioned the Dow's following it and the Russell. So again, much more bullish bias in the S&P 500 because the Dow index is inside of it, where the NASDAQ's holding it back right now. Let's go into energy. Crude oil. Very light trading range. Yep. From Friday to Sunday nights. Still tight trading range. We haven't taken out the high or the low from the Sunday. We certainly have not done a deep retracement of this one yet. I'm still bullish bias on crude oil and seeing good opportunities to reload on the lower levels. Bull put spreads making income. So as we crawl higher, you might see more volume start pushing it up to get some impulse moves to the upside. Natural gas, nope, it's worse. It's more bearish. Big difference the way the price action is showing on here. Why? Because look, natural gas broke below the low of Sunday and certainly below the low of Friday. Bearish bias. This one's like a champ. People are buying. Go to the metals. The metals. You like metals? A lot of people like metals. Start looking at gold. I'm seeing distribution still. We had this engulfing candle, bearish engulfing candle, followed by impulse move down, consolidation. So it looks like, to me, we're going to have a more downside. Key demand zone. If it tests here, I'm going to see if there's a trigger to buy. If it doesn't look good, I won't buy. I'll sit on my hands. Watch if it does a further retracement. Look for opportunities. Yep. I'm still expecting more flush downs in gold. But that won't stop me jumping in the other direction if I see trading opportunity. So gold, yep, inside the range from overnight still and from Friday. Yep, silver, huge move below the low of Fridays. So it's even more bearish. Platinum, nope. It's still bearish and did make that lower low. It's also building a huge wedge, very interesting. Okay, the important metal, the industrial use metal, copper. Look at that. This low took out the low of Sunday night, took out the low of Friday, extremely bearish copper. That's bad for the industrial. That's bad for the many levels of economics. Why? Copper is used for industrial manufacture. Broadly, if you just look at your appliances in your home, your industrial manufacture plants, yeah. So if there's less demand on copper, don't you think those companies are the ones that are buying less of it? Or you think it's a family member or neighbor that's hoarding copper or not buying copper? Come on now, look at the industries. And which country is biggest production of, let's say, appliances? Wouldn't it be China? So if they have less demand for copper for their warehouses, they may have to lay off labor. Oof. And those people may not be able to eat. Or are they going to lock them back in their homes again? Or where we have a change in government? Wink, wink. Geopolitical. Let's go into currencies. The currencies. Look at the FX pairs. I already showed you the US dollar. So now let's look at the euro. Trading totally inverse from the US dollar. Looks like distribution still occurring. Yep. So remember, in this summer, Saudi Arabia, United States, China, Canada, yeah, most Western countries are spending more money on energy. Not to drive their cars, folks. No, it's because they use air conditioning. Yeah. The Europeans are really struggling because, again, they import a huge amount of crude oil and they're paying the market price. That was their choice because they didn't go more onto reusable energies. Japanese yen, same thing. Near the downside, huge consolidation from the trend down, but to the key level demand zone, high probability between here and here. Building a wedge, look for a breakout for a trade opportunity. And the British pound, what an interesting move it made last week. Big reversal, big volatility, showing that they're still alive. Lower highs, retracement here on weakness. Yep. So we're inside the range of that Friday still, the smallest trading range. But look at here, we have demands on buyers stepping in here. Opportunities. Let me show you this on a daily time frame. Just show you what happened out of the ordinary on the daily time frame. So looking here, the longer time frame, British pound has been rolling over. Friday, huge impulse move up. Nice. Still has this huge consolidation struggling on top. Let's put that on a weekly. Yep. So even on the weekly, strong trend down, consolidation. So again, using multiple time frames, starting from the top down and labeling key price levels for places to look for your triggers off your faster time frames. Just candlesticks. None of these other, let's just call these studies added on. Their studies people might put on. Yep. Many thanks for watching.